Welcome to the Orbit. It is Monday, May 20th. We've got Income from Options Weekly, where we start off the week looking at the setups for credit spread traders, those that are selling options for income. We've got a bit of a rally going on in the market this morning, up about 0.4%, which is about in line with the expected move. Once again, volatility is extremely low, about as extremely low as you will see SPX short duration vol. You can see that right here. We are at about 11 IV today for just a 0.2 expected move for the rest of the day. Tomorrow we have 9 IV, single digits. And that is a 0.4% expected move. I want to go out to the week because something interesting happens midweek. And so you can see this single digit vol all the way through Wednesday. And then Thursday options spike a little bit. It's still low IV altogether, but it is slightly higher. And you see that 12 IV and almost a 0.9, almost a 1% expected move out to Thursday and then into Friday. And what that is NVDA's earnings on Wednesday evening after the bell. So the options market is basically pricing some sort of sideways and slow grind action up until the NVIDIA earnings. And then the NVIDIA earnings, obviously, it's a mega cap tech company that can move the indices, move the Qs, move the SPY, move the SPX on its own just with any sort of big move. But at the same time, it's an overall vibe check for the market. Obviously, NVIDIA and those types of stocks have been at the center of a lot of the rallies we have seen over the last few months in the market. And this is a vibe check for the market. Is NVIDIA going to power us up into new highs and spike the Qs and spike SPY and SPX up higher? Or if it disappoints, or if investors are disappointed, or if they see it as a selling opportunity, is that enough to sort of end this rally we've seen over the last couple of weeks? Let's check in on NVIDIA and look at the setup in the stock itself. As you can see, we've got about almost an 8.5% expected move. That IV is about 105 right now. That should go up a little higher into the event, actually. You can see coming out of the event, it gets down closer to 50 IV for the 30-day IV. But call it about 8-9% expected move at the moment, and that is Wednesday after the bell. Going back to SPX, let's look at some zero DTE trading. We are up about 0.4%. The expected move is just 0.2% from here. So let's look at that credit call spread selling up above. And again, you have to be, if you're a credit spread trader here, you have to be extremely careful. You can see what we've done. This rally actually started into the close on Friday, expiration Friday. The market tried to sell off a little bit down here, and we got down to about, let's call it the 52, 80, 85 level. And then we had a strong move into the close where it basically, not even basically, it pinned at 5,300, and that was that effect of a lot of that expiring gamma. Now we have, and it could be gamma related, where you get that rally on Monday morning, and a lot of that could be changing deltas, changing gamma of a lot of those positions. So now we're up above that 5,300 level, and 5,300, obviously a lot of support there gamma wise, and then below that down near that 5,280 level. So, and then up above, it's a little bit, a lot of times in low IV conditions, selling credit call spreads, or even the credit call spread side of an iron condor, can be at risk in those slow grind days where you might finish up 0.6% or something like that, even if options were just pricing a 0.5% expected move that day. So you have to be careful, but let's just look at the credit call spread here. And what we will see, and this is up at the expected move, let's come into here, risking, you can see that low vol. So we're risking 4-1, actually a little bit worse than 4-1 for that credit call spread. If you take that up one strike, it's even a tighter risk reward. You're getting to that point where it's almost picking up pennies off the train track. But the market is already up 0.4%. And so this is positioning against it continuing and breaking out today. Obviously, if you go out to the end of the week, you would want to be much wider for those kinds of moves after NVIDIA. On the credit put spread side, or let's just look at the iron condor. And if we do the iron condor, you'll see the level on the downside on the credit put spread side. You can see just how tight those expected moves are right now. So this is risking 330 to make 170 on an iron condor for the rest of the day. Your short call is up at that 53.35 level. Your short put is actually above 5,300. If you took this entire trade down a little bit and kind of pressed this rally, got this a little bit, and then let's actually take this a little bit wider. Let's get the 5,300 as the short put, go a little bit wider than that, and get the upper strike at 53.40. So this is a slightly bearish center, but not much. But it's taking into account the fact that the market is already up this morning. And you can see we are past that 4-to-1 risk reward ratio. If we tighten it one and we get to the 53.05, which was our close on Friday. So this would be shorting a put at the close on Friday. You get back to a little bit above that 4-to-1 risk reward ratio. Going out to the end of the week, if we do let's just look at the condor setup, and going out to Friday, we've got strikes of 52.70 on the downside, so that's below Friday's low, and then 53.75, that's getting you up to that 5400. In conditions like this with long gamma, low IV, you often see the market do those, just using the SPY as an example, you see those, on a big day like NVIDIA, or last week it was CPI, you get that, 50-point rally in the market, then it kind of goes sideways for a couple of days. And then, maybe a couple of days later, you get another reason for the market to break out a little bit, goes up another 50 points. So you have to be careful up there. And let's take this a little bit wider. If that were to happen, and if NVIDIA were to take the market higher into Friday, getting that up at that short call up at the 5,400 level, or even up above that on a rally, 54.05, gives you a little bit of room for the market to perhaps go and hit that next big round number strike with lots of gamma on it up at the 5,400 level. And you can see this risk reward of this condor. On the downside, it gets you down to about 52.45. So you're down slightly below that 52. There's a lot of gamma in that 52.50 to 52.85 level as well. There's gamma all over the place. Eventually, the market could rally through a lot of that gamma to the upside. You would still see lots of low IV, but it would at least have a chance to maybe get away from a lot of this gamma that is accumulated at these levels. The overall market condition here is very low IV, so you have to be careful. It's the market is most likely to cooperate and not make big moves intraday and not make big gaps overnight, higher or lower. But at the same time, you are, having to sell pretty close to the money. And so you have to be nimble, perhaps some mental stops there. If the market is challenging one of your levels and you feel like it's too close, perhaps it's an opportunity to kind of roll it higher or lower dependent on that move. But the market conditions are for very small moves, but the options you are selling are pricing for very small moves. And if you see a red day, the vol should pop a little bit. Obviously, we probably see higher vol. It's already there going into NVIDIA's earnings. That's the big event for the week, is going into Wednesday. But options are pricing not much movement between today and Wednesday. And then they're pricing a little bit more movement from Wednesday into Thursday and Friday.